Hi, let's revisit Fantom, ticker symbol FTM, currently at $1.20, a market cap of 3 billion, and so the market rank relative to other cryptocurrencies is 46. So Fantom is the 46th largest cryptocurrency in terms of market cap. Now, as usual, we will not just look at the US dollar chart, we will look at Fantom valued in Bitcoin, but we will also look at Fantom's relative performance to Ethereum, because I think that's really what counts. How does the altcoin outperform Ethereum? Because really Ethereum is leading the altcoin market. Ethereum has the highest correlation to the altcoins. Bitcoin only has a correlation coefficient of around 0.6 in terms of daily returns to the altcoins. Ethereum has one of 0.65. It's higher correlated. And so really Ethereum is driving the altcoin market, the direction of Ethereum. And so the relative performance of the altcoin to Ethereum is really what matters. Because if you want general crypto exposure, you can simply buy Bitcoin or Ethereum, right? But the reason why you're interested in Fantom is probably because you're looking for outperformance. And so that's exactly what you need to look at. You need to look at outperformance versus other coins. You don't just want to look at the performance versus the US dollar, even though this was very impressive for Fantom. Since the beginning of the year, Fantom went up by around 70x. That's way more than what, for example, Bitcoin did, right? Bitcoin was almost stagnant. We went up by 40% and Ethereum kept up a little bit better, a 3x since beginning of the year. Now, why am I looking at the performance since the beginning of the year? That's the point in time when Bitcoin dominance started to fall, right? We actually had quite a nice bull run in Bitcoin already in 2019 and 2020. But Bitcoin dominance did not fall during that time. Bitcoin dominance actually went up from 54% to 72%. And that happened during a time when Bitcoin almost 10x'd, right? So we had this incredible rally here. Bitcoin really gained ground, but Bitcoin dominance also went up. And that's very interesting to note, right? The riskier altcoins, the crypto assets that's supposed to be outperforming during positive times, they actually did not outperform during this 10x rally in 2019, 2020. Bitcoin dominance went up. But this flipped around like a light switch since beginning of the year. Bitcoin dominance then fell from 72% all the way down to 40%. So suddenly we get this altcoin rally. Bitcoin as a fraction of overall crypto went down and it stays down, right? We are currently at 42%. And so this is when the altcoins, they gained. And that's why it's so interesting to look at the performance of any altcoin since beginning of the year. And so Fantom obviously did quite a nice job here. But even if we compare this to Ethereum, the outperformance versus Ethereum of Fantom is not bad either, right? More than a 15x. But we do see this comes with volatility, right? This is not just a steady outperformance. This comes in very quick movements. And then when attention goes down, the price tends to bleed. So this is the long-term performance since October 2018 of Fantom versus Ethereum. Now you don't want to be in Fantom when this kind of movement happens, right? This is an underperformance versus Ethereum of almost 80%. So this is from the end of February to the middle of August. And when you look at this in the US dollar chart, end of February to middle of August, it doesn't look so bad, right? It's maybe 40%, maybe 35%, something around that region. So it looks like we're almost hovering in like a sideways trading range here. But on the Ethereum chart, you can really see the true direction. Because I think that's really what's happening with altcoin trading. People have their coins they're willing to hold for the long term, like Bitcoin or Ethereum. And then they jump onto those altcoins when positive news hits. And they're trading in and out simply to make short-term profits. And what you can very often observe is when we look at trading volume here, that these price increases, they do coincide with increased trading volume as well. So a lot of attention and a lot of trading volume, very often triggered by some news, they invite new investors or new short-term speculators into the market. And when the short-term rally is over, the asset gets sold and then the next altcoin is on the list to then ride the next rally. So it's important to look at trading volume. You don't want to necessarily buy in when trading volume is very, very high, because that's often the time where also the price is elevated. Once trading volume falls back to normal levels, the price tends to decline And if it doesn't anymore, if it doesn't decline relative to Ethereum, that's potentially a time to buy because it means attention is low, nobody cares about the asset, but at the same time, the existing investors, they are not selling anymore. There's not too much selling pressure anymore. And so you can bet on the relative performance not being too bad, right? A relative stabilization. But once attention comes back to the asset again, then the short-term outperformance is on the cards again. In this case, this was a almost 5x since the beginning of August. And so if you just look at this over the long term for Fantom, we are obviously not very cheap right now, but that doesn't mean it can't go up anymore. If we look at the very first pump here that happened at the beginning of the year, we also had very high trading volume and the price versus Ethereum went up quite a bit, but we didn't fall too much, right? The trading volume went down and we consolidated. And so another pump could happen again. Now here, when trading volume went down, the price continued to fall. And that's a problem. It's hard for an asset to quickly go up again if a chart looks like this, right? It's simply scary. People don't want to see their money over time bleeding away. And so you really need to see the consolidation, and that's when we can go back up again. And so where are we now? Trading volume is relatively high. We are looking at around 25 million in trading volume. During the calm times over here, just before the big rally, we were only at around half of that, right? So obviously I can't read the future either right now, but this is definitely something to note. Trading volume might go down further. And during declining trading volume, it's definitely not that easy for Fantom to outperform Ethereum. I'm not saying it can't happen, but it's definitely a harder task. Now, it's also interesting to look at Ethereum because Ethereum does dictate where the overall crypto market is headed. And if we look at the historically speaking most significant moving averages, the 23-day moving average here in light blue and the 39-day moving average in dark blue, we see we are below both of those, which is not pretty. So momentum is not yet positive. Last time when we crossed the 23-day moving average from a similar level, we went down by almost 50%. If we look at the price movement since the cross of those two moving averages, that's a 32% move. So we are now crossing again. I'm not saying this has to repeat, but if it was to repeat, we are looking at a price of Ethereum of around 2,100. Now those two movements, they look pretty similar, right? But the nature is actually quite different. If you look at what happened here, during the May crash, we can see the trading volume went up a lot. And afterwards, we had quite a bit of volatility. So the daily price movements, they were massive. That's even more pronounced if we look at the intraday movement. So let's change to candlesticks. Here, look at this. This is a daily chart, and within 1 week, we went down 50%. So this is 5 days of trading, 50% of trading range. And this is pretty different to today, right? Trading volume isn't as elevated as in May, and the volatility isn't that high either, right? The situation is much more calm, and so unless we don't see a large crash here, I wouldn't even be sure if we can't continue going up again. So really, I don't really have a clear conclusion where this is going. I tend to be on the cautious side simply because we are now below those moving averages. And historically speaking, if you backtest those two moving averages, they give the best returns for Ethereum. So really, you want to be in the market when we are above the moving average, and you want to be outside of the market when we are below. So that strategy works really well for the 23 and the 39-day moving average. And so as per tendency, it doesn't look too bullish. But on the other hand, we also have to consider fundamentals, right? This is simply just the technical analysis. But it does look like proof of stake could come by the end of the year or maybe by Q1 of next year. And if then the gas fees really go down significantly, and it's possible to trade altcoins and ERC20 tokens and NFTs for really low gas fees, if all of those things are possible, then also things such as crypto gaming will become much more attractive, right? The whole ecosystem is likely to grow, in my opinion, if gas fees can come down to a normal level, and this could happen rather sooner than later. And it also gives another incentive to hold Ethereum, right? The problem with proof of work and with Ethereum is that all the newly created tokens, they go to the miners, right? They go to the people that run the GPUs, that burn the electricity. But when that changes to proof of stake, the inflation will go to the current holders. And there is quite a bit of inflation in Ethereum. This here is the Ethereum market cap divided by the Ethereum price. So what you can see over here is how much did the market cap increase relative to the price, or how much inflation did Ethereum experience. And if you just measure this from, say, July of 2017 to today, we are looking at around 26% increase of supply. So without that inflation, Ethereum would be way higher in price. And so once proof of stake is established, this will reduce dramatically, right? This line over here will flatten a lot. And as a holder of Ethereum, you will gain from that proof of stake inflation, similar to what's currently happening with Cardano. But the overall slope of this will go down. And this simply means that gas fees will go down. And that's a very positive thing, right? This is good for the ecosystem. Today, it's pretty hard to make money with NFTs, right? The transaction costs, they are so high. You really need to buy very large NFTs to trade them somewhat profitably. But when this comes down, then mass adoption can happen, right? Then the decentralized exchanges, the Uniswaps of this world, they are likely to grow. The centralized exchanges that charge a lot of fees, the Coinbases of this world, they will probably lose market share. And so when Ethereum becomes more important by, say, the end of the year or by Q1 next year, then I wouldn't be surprised if the momentum can pick up again and if we can finally go above those two moving averages again and target new all-time highs. If you enjoyed this video, please give this a like. YouTube will then help to grow the channel. If you haven't yet, feel free to subscribe as well. I publish videos regularly. Last but not least, we've got a Telegram channel, the Bitcoin Strategy channel. You can find us either by clicking the link in the video description or simply by searching for Bitcoin Strategy channel within the Telegram app. See you next time. Bye bye.